Have you ever wondered why so many people jump into cryptocurrency expecting life-changing profits, but end up losing more than they ever imagined? You see flashy success stories online, people doubling their money overnight, and influencers claiming that crypto is the shortcut to financial freedom. But behind the scenes, millions of beginners walk into this world with no preparation, no strategy, and no understanding of how volatile the market truly is. What you rarely hear are the painful stories of people losing their savings because they didn't know the rules of the game. Crypto is full of opportunity, but it rewards education, not guesswork. Before you invest even a single dollar, you must know what dangers lie ahead and how easily people fall into them. In this video, we'll break down the real reasons people lose money in crypto and how you can protect yourself from making the same costly mistakes. One of the biggest reasons beginners lose money is that they jump in based purely on hype instead of logic. When social media starts praising a coin or influencers call it the next Bitcoin, people rush to buy without checking anything about the project. This emotional reaction is known as FOMO, fear of missing out, and it tricks people into buying at the highest point. When the excitement disappears, the price falls sharply, and beginners end up selling out of panic. This repeating cycle has destroyed portfolios during meme coin seasons, NFT booms, and random pump phases. Successful investors don't chase hype, they study what they're buying. Before putting money into any coin, understand what problem it solves, how strong the team is, and whether it truly has long-term value. If you don't understand the project, don't invest in it. Not knowing how crypto works. Another major reason people lose money is a lack of basic knowledge about how crypto actually works. Many beginners buy coins without knowing what a blockchain is or how wallets function. They don't understand private keys, seed phrases, or how transactions are processed, and this creates dangerous gaps in their security. Losing access to wallets, sending coins to the wrong address, or falling for fake recovery services happens because people skip the learning stage. Crypto is not just digital cash, it's a complete technological ecosystem with rules you must understand to stay safe. Taking time to learn how transfers work, how networks confirm transactions, and how wallets keep your funds secure can save you from big losses. Education is always the strongest shield in the crypto world. Crypto is full of scams because scammers know beginners are easy targets. Fake investment platforms promise unrealistic returns, and social media fraudsters pretend they can double your Bitcoin instantly. Some scam websites look identical to real ones and steal your login details as soon as you enter them. Even experienced investors have been tricked, because once you send crypto to the wrong place, it cannot be reversed by any bank or support team. Scammers take advantage of people who act quickly without verifying details. That's why you must always check URLs, verify platforms, and avoid clicking random links sent by strangers. Use official apps, trusted websites, and never share your seed phrase with anyone. No legitimate company will ever ask for it. Many people lose money simply because they store their cryptocurrency in unsafe places. Some keep all their funds on exchanges, believing it's convenient, but when those exchanges get hacked or shut down, users lose everything. Others rely on hot wallets connected to the internet, which makes them vulnerable to online attacks and malware. The safest option for long-term holding is cold storage hardware wallets or offline devices that hackers cannot access. Learning how to safely move your funds, back up your seed phrase, and secure your wallet should be your first priority as an investor. A strong storage strategy protects your assets even during market chaos. In crypto, your security is entirely in your own hands. Pump and dump groups are one of the most common traps beginners fall into. These groups secretly buy a cheap coin, create fake hype around it, and convince thousands of people to buy in. As soon as new investors enter, the insiders sell for massive profit, causing the price to crash instantly. Many beginners join these groups believing they are getting exclusive signals, but they are actually the ones being used. If someone tells you a coin will moon soon, it usually means they already bought it earlier. Real investing does not rely on shortcuts or secret groups. It relies on research and timing. Avoid any community that pressures you to buy immediately or promises guaranteed profits. A large number of new investors lose money because they have no plan at all. They buy randomly, sell emotionally, and change strategies every time the price moves slightly. When the market rises, they become greedy. When it falls, they panic. This emotional cycle destroys even the best opportunities. Successful traders follow simple but powerful principles. Set goals before buying, know when to take profit, and decide how much you're willing to risk. Patience is the secret weapon most beginners ignore. Crypto rewards people who stay calm, ignore noise, and make decisions based on research, not on fear or excitement. Having a strategy protects you from impulsive mistakes. Sometimes losses happen because the entire market reacts to sudden global events. When governments announce bans or restrictions, prices often drop immediately. When major exchanges collapse or fail, the whole crypto market feels the shock. Because crypto operates worldwide, news from any country can create ripple effects across prices everywhere. That's why diversification is essential. Putting all your money into a single coin or project makes you more vulnerable. Studying global trends, economic shifts, and regulatory updates helps you avoid investing right before a major downturn. Understanding the bigger picture keeps you prepared for sudden market changes. Another hidden reason people lose money in crypto is blind trust in influencers and online personalities. Many content creators promote coins not because they believe in them, but because they are paid to advertise them. Beginners see confident videos, emotional storytelling, or flashy gains and assume the project is safe. In reality, influencers often sell their coins as soon as their followers start buying, leaving their audience with the losses. Social media makes everything look urgent, exciting, and guaranteed, but none of it replaces your own research. Before acting on anyone's advice, always check the project yourself, read its white paper, and understand whether it truly has potential. In crypto, trust should be earned, not given freely. Crypto has patterns, cycles, and seasons, yet many beginners invest without understanding the timing. They jump in during peak bull runs when prices are already inflated and exit during bear markets when everything is undervalued. This backward strategy causes unnecessary losses. Successful investors observe trends, study market signals, and learn when to wait instead of rushing. Timing does not require predicting the future, it requires awareness of how markets naturally move. By learning how cycles repeat, you can avoid buying at the top and selling at the bottom. The more you understand these patterns, the more confidently you can navigate the market without fear. Now that you know the major reasons people lose money, it's time to understand how to protect yourself. Start by learning the basics of blockchain, wallets, and how transactions work. Avoid hype-driven decisions and never invest emotionally. Be cautious of anyone offering guaranteed profits or quick returns. They are almost always scams. Use cold storage for long-term holding to keep your assets safe from online threats. Begin with small amounts until you become confident and knowledgeable. Double-check wallet addresses before every transfer and never share your private key or seed phrase. Most importantly, research every project thoroughly before investing your hard-earned money. Did you know weak security can destroy your entire portfolio overnight? Before chasing profits, make sure your crypto is protected. Use strong wallets and enable two-factor authentication everywhere. Never store recovery phrases in unsafe places. Choose exchanges with honest reputations and real security. Treat your money with seriousness and caution. A few smart habits can prevent life-changing losses. Security is the foundation of every successful investor. Like this video and subscribe for more beginner-friendly crypto guidance.